Hello and welcome to the December edition of Pork Talk. This month we're going to focus on China, reflecting the uncertainty the country is generating on the global pork market at the moment as African swine fever continues to spread. China is the world's largest pork importer, receiving 1.6 million tonnes in 2017, according to USDA estimates, which is around 20% of the total volume traded globally. As you can see, it is an important destination for EU pork exports in particular, and within this, the UK exports around 4% of its total pig meat production to China. However, imports still only represent around 3% of Chinese consumption, as most pork eaten there is domestically produced. The Chinese pig herd has been restructuring in recent years, with a move towards larger, more commercial operations. This had been expected to depress import requirements over the coming years, and indeed, early in 2018, Chinese pig prices were at a multi-year low, reflecting oversupply on the market. However, this expectation has now been turned on its head by the discovery of African swine fever in Chinese pigs in early August. This has subsequently caused significant market disruption. The government has implemented a number of transport bans, making it difficult to move pigs to slaughter from affected regions. So while these affected areas may experience an oversupply of pigs, on the other hand, areas of high pig meat consumption are consequently undersupplied. This means import opportunities may now arise in order to fill the supply gaps and stem pork price inflation. It is unfortunately difficult to assess the impact on trade opportunities so far, as China has not released any trade data since March. However, export data from key suppliers is available up to September, and these figures do seem to suggest import demand has been rising. So what can we expect in the future? ASF developments have escalated recently, with cases now found on farms in Sichuan, the most important province for pig production, and in wild boar. This indicates that measures so far have not been successful in stemming the spread of the disease, and so further market disruption can be anticipated. This may mean more opportunities for exporters, which could go on to support global pig prices, perhaps significantly. As the US is disadvantaged on the Chinese market by prohibitive tariffs at the moment, Brazil, the EU and Canada are better placed to make the most of this potential opportunity. A word of caution though, Chinese consumers may be deterred from buying pork due to the prevalence of ASF, even though this poses no risk to human health, and this could limit the size of the import demand. Of course, the wider spread of ASF is also a concern for the pig industry worldwide as it becomes more difficult to contain. The October edition of Pork Talk discussed some of the concerns regarding further spread in the EU from a trading perspective. See the link in the description below. For more up-to-date information about this and other challenges facing the global pork industry, please visit the Prices and Stats section of the AHDB Pork website.